Hello and welcome to another update video about ADA. So ADA's uptrend, local uptrend, is still ongoing. We are going to take a look at that in a minute. First of all, just a quick recap of where we actually come from anybody who's new on this channel. We're basically still tracking two main scenarios here, okay? We first of all are dealing with this Elliott wave triangle that you can actually see on the chart, which we call an ABCDE structure. It's the white wave count. A, B, C, D, E. The story of this triangle is we've been following it for a few months, and we actually wanted to see the price to get into the ideal target area, into this white box. This white box has been on the chart for probably a couple of months, really. So you'll see that in the videos already from August, I think, or August, early September, maybe. The price did eventually reach that area, and this is the ideal target area between 30 and 34 cents for the E wave of the triangle, like the last wave of the triangle. As I mentioned many times, however, there isn't really a limit for the E wave until it gets above the C wave. So it must not get above the C wave. That's the 38 cent level. A break above 38 cents would basically make this triangle far less likely, because it would need a recount of the triangle, because in a contracting triangle, the E wave, which is the last wave, must not exceed the height of the C wave. So we would have to either consider a recount of the triangle, which means that wave C is still ongoing, which is not impossible because a C wave of a triangle can often be a very complex correction. And then we would have to shift the D wave over here, and the E wave would also have to be moved over here. So that would mean many more weeks of sideways action. Or if we break above the 38 cent level, we will have to consider a different count, which I will do, which we're already considering. It's been on the chart for many months as well, which is basically the assumption that the price could have bottomed already here. And that was basically the overall low in June. So that would be a diagonal pattern. But as I always said, we can't really make that, let's say, a primary scenario until we see a break above 38 cents. It didn't matter in the short term anyway, because in both scenarios, we were watching for a rally at least into the target area anyway. Now that we've arrived there, we can see that the price is even pushing a little higher. So the yellow count certainly gains in probabilities. Okay, that's how it's to be understood. If the ideal target range for one of these scenarios is exceeded, then obviously the other one will get more likely. If I gave you probabilities, the probabilities for the yellow count will just have increased. However, does that mean that it will definitely be bullish and that we go to the moon from here? Not necessarily. We all hope it, but not necessarily. So in the white count, as long as we stay below 38 cents, we still have to consider the risk of another bear market low directly from here. But above 38 cents, this will get far less likely, at least from a triangle point of view. So what would be an additional scenario that we have to consider? Well, I mentioned that in the last few days especially. It's basically that this here would be a 5-wave move, 1, 2. We're basically now in a third wave, then there should be a fourth and a fifth. That would be a 5-wave move. Now, the problem is that this could simply be embedded in a larger A, B, C structure. So A wave in 3 waves, overshooting B wave to the downside, C wave rally. Perfect wave count. Therefore, this is also a bearish scenario, and we could still get another bear market low afterwards. So the risk of another bear market low will not disappear for a while. However, if we get these 5 waves up and then see 3 waves down, that would increase the probabilities again that we go to new all-time highs from here. This would at the same time be a setup. Okay, a trade setup, basically a tradable setup. But yeah, sort of that's what we're watching right now on the ADA chart. These two scenarios, and the only message is we cannot really rule out bear market lows until we see 5 waves up, 3 waves down on a decent time frame. That could mean that the yellow count, well, it could take us first to roundabout, and just that you know what you have to expect. If this really is a diagonal, I mean, if this in 5 waves, sometimes they even stretch out to the 200% extension. 70 cents, okay? Sometimes 5 waves in a diagonal stretch out to the 200% extension, 70 cents. So we have to consider that They always want to avoid that people say, oh, okay, you said we have to wait for a pullback. No, no, no. I'm just saying that only when we have 5 waves up and 3 waves down, we have the next pullback trade set up. There will also be one probably in wave 4. Okay, and you can also trade breakouts, right? That's where analysis and trading skill differ, you know, where the analysis just tells you about structure, but as a trader, it's always about reward and risk. Now let's go to the 1 hour chart, and here we can see that we've broken above that 61.8 fib extension on the smaller time frame. So on the micro level, I'm counting, I've got 2 structures here, either a 5-wave move up, which gets very extended now, or an ABC structure. I think the ABC structure that we already talked about in the last few days has become just much more likely. In this C wave to the upside, we highlighted we are targeting sort of 36 cents. Next, if we can get a break above 32.9 cents, I think that's the next level to get to. And above that level, we have the important 38 cent level. And then we just need to see where we stand. I mean, again, you know, the trend is up. We highlighted this trend line. The trend line for now is being respected. And the trend is still up on the microstructure, okay, the micro level. So if we get the first decent pullback, I will add the next support area. We had one here, which worked nicely as a potential entry point for anybody who wanted to use it. And now it's just sort of letting it run until it gets exhausted. And the next levels to watch are on the chart. So the 1-to-1 ratio is a key one, okay. Here, this C wave in yellow is the 100% extension of the A wave. That's an absolute important level, but I would not rule out that it gets to 38 cents or even 41. I mean, even that is a C wave target. Above the 1.618 extension, it gets a bit long for a C wave, but it would not be invalidated. Very important to understand. Target for yellow wave 3, maybe we can put that onto the chart. So if we really are in the overall yellow wave count, right? So what would be a target for a third wave in a diagonal? Typically, we're looking for the 1.236 to 1.38 extension range, so 46.8 to 50.7 cents. Yeah, I think that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.